All right, what's going on, guys? Good morning. It's the Money Talk Show with Dane, where we talk about all sorts of interesting topics having to do with money. So, if those are interesting things for you, you're in the right freaking place. Here, we primarily talk about real estate and crypto and how those two asset classes come together just absolutely beautifully. If you know how to operate, you know what you're doing. We're doing our absolute best to be the bridge between people that are operating real estate and entrepreneurship and crypto and helping them understand what we feel like is the best opportunity over the next few years. And it's not even freaking close. So grateful to have everybody here. With that, Corey, go ahead and take it away.
Yeah, Corey Geary here, Crypto Millionaires with Corey Geary, and just trying to spread the good word of cryptocurrency amongst all our real estate friends and entrepreneur friends and bring them along for this journey, this ride that we have upon us that has probably the best opportunity in a lifetime that we've seen, being in this bloody bear market, legging up for this next bull run. And with the money printers being turned back on eventually and the presidential elections and the Bitcoin halving on the horizon, we're just going to see a massive explosion in the crypto ecosystem, not to mention in the Richard Hart ecosystem with Pulse Chain about to launch this year sometime. It's just going to be phenomenal. And that's what I'm really excited to have our guest on today, because this guy really likes to pull the layers of the onion back on charts. He's I would say he's probably one of the best chart readers in our ecosystem, in the Hex ecosystem, and he really knows how to explain it to where we all can consume it and understand it. And man, Axis Alive, it is a true honor and blessing to have you on this show. You're a freaking legend, absolutely legend in in the Hex ecosystem, man. So thank you so much for being on today.
All right. Well, cheers, brothers. Thanks for having me on. I really appreciate the opportunity to come speak in front of your audience. And, I hope that I can make a good case for why I think this is going to be a good year for pretty much everybody in the markets.
Absolutely. We're excited. And for you guys that are tuning in, man, in fact, we talked about this in the green room before. With real estate, to do a good job at real estate investing, you have to have a data-driven approach. If you're just flying by the seat of your pants and running off emotions, you tend to lose money. And that's how most people do real estate. And that's why most people don't succeed in real estate. We see the same thing with crypto. If you're not running based on data and based on math, then you tend to have bad results. And so that's one of the things we really appreciate about Axis is his data-driven approach with his charting abilities, his understanding of markets across the world and various asset classes and sectors. And so we wanted to bring him on today and specifically have a conversation about where we may see real estate over the next little while, where we may see crypto, how those ecosystems are coming together. So with that, Axis, give us a little bit of background. We've seen your streams, we've seen your data talking about working in, I think it was Costco or Sam's Club and stocking shelves. Give everybody just a real brief background on how you ended up where you're at.
Okay. Well, I started, but from modest, come from humble and modest beginnings, small town in the Midwest. I've done a lot of different jobs in my life. I've worked at a radio station. I've worked in agri-industrial construction. I've worked retail with Costco for 6 years or so. Worked for American Airlines. So I've done a lot of different jobs, and I've seen a lot of different industries and a lot of different walks of life. And so what that did is it gave me this overarching ability to understand the social dynamics, to watch trends change over time, just kind of by word of mouth, understanding different people's perspectives on the world. And that all was kind of, it was a backstop basically that helped me with what was my inner desire to kind of help me find a way to fix the money system. Because originally this all started with being introduced to a documentary called Zeitgeist. I don't know if you guys have ever seen that documentary, but it basically blows the lid on the central banking system and how it's kind of like a corrupt entity, private entity at that, not controlled by the state. It is in the constitutional state of any nation really. And so I was disturbed by that at the age of 18, and then forever forward, I was thrust into this journey to try to figure out the solutions to that. So then fast forward to 2017, I learned a little bit about Bitcoin sitting down at the kitchen table with my buddy, and somehow the conversation went from damn bro, I wish I would have bought Bitcoin at $200 because now it's like $1,300. I missed the boat. To you can mine this stuff and you can print money legally in the world. And then that just totally like blew my mind. And I was like, okay, so wait, you're telling me that you can hook up a computer, run some code, and start earning earning money. This completely changes everything. It gave us an opportunity or a way to kind of shift focus and try to come up with some solutions to that central banking problem.
Very cool. So you ended up in crypto. That was in 2017.
Correct. It was March of 2017. Yep.
Okay. And tell us how you ended up finding Richard Hart and in the Richard Hart ecosystem.
Okay, so this is kind of a cool story. So I actually started off mining Bitcoin and mining Ethereum. I put together a blueprint, drawn up all the electrical, how it would all work in this building. We built the building, started mining Bitcoin and Ethereum in 2019. Ran it through the bear market, which, by the way, when prices are going down, it is very hard on miners. And I think I got to the point that year where I was like, this is just so stressful. There's so much initial investment, like a lot with real estate. There is that initial investment and effort that gets put into that. So what you originally thought was going to be passive income just doesn't really suit that purpose, right? You really have to be a go-getter, and you have to be willing to work with clients, and you have to be willing to hire hands and stuff to really make that work at scale, including with mining. And so it wasn't until maybe a month or two before Hex launched, I actually saw Richard Hart on stage in Malta video. Obviously, I wasn't there in Malta, but I was watching this video of him to kind of describe how he was going to create this blockchain CD and how its potential for a 10,000x and these things. And, I was like, well, that's interesting. And he was so captivating that I was able to just feel that out, and just kind of trust, there you say, don't trust, verify. But, in this case, I was kind of putting my trust in him because at that time, I didn't really understand the deeper levels of the code. But so the code launches in December of 2019. By this point, December 2019. And by this point, the mining thing isn't as profitable as it once was, right? Because at this point, we didn't get the start of the bull run. That all happened after March of 2020, after the COVID crash. And so, fast forward, I put in a couple stakes and I let them ride, and I kind of left the Hex community or I guess I just didn't even know there was a community at this point, right? It was such a new thing. But then I left for 8 or 9 months, and then, somewhere in there, the price started pumping like crazy, and I was like, there's got to be something to this, So I came back in and dove back in. Well, fast forward to the following summer of 2020, and, DeFi summer happens. Bitcoin went from the 3,800 low during COVID all the way up to 12,500. And, I'm looking at this and I'm thinking, okay, mining's going better. This altcoin, shitcoin at the time was this thing's doing pretty good. And so I guess it was kind of an eye-opening moment for me that, okay, so crypto's back and we're looking good. Fast forward, January of 2021, I've decided to go public. Along this time, I'd met a friend who I worked with that was already doing markets for 40 plus years. He actually did it professionally down at the CBOE in Chicago, trading the risk side of the portfolio and commodities. And he kind of took me under his wing to help me understand the markets a little better and kind of gave me some perspective on that. And so, I guess I am the culmination of all these other disciplines, kind of all coming to a point now where I like to have this bigger global, broader scope of all markets so I can monitor money flows across as many sectors as possible. And right now, there's just a secular trend happening where all of the legacy systems are getting the rug pulled out from under them by technology. And so I want to be on the cutting edge of the best technology to kind of capture that wave. Because if you can capture a new technology at the beginning of an S-curve, you can see insane returns and lock those in and create generational wealth for the people you care about.
That's amazing. Hey, can you touch on real quick before we dive any further? When you were first watching Richard Hart, you said he was captivating. Now, what makes you think or what do you think the reason is you saw the opportunity in Richard Hart versus other people? Because a lot of people saw him and immediately thought scam, right? And they're like, oh my God, this guy's a scammer. He's got a big ego. What do you think it was that you were like, hey, you saw the opportunity that he was creating, the difference why someone else that thought he was a scammer? What do you think it was? What was it?
I don't know if it's a sixth sense or some other paranormal ability. When I listened to him talk, the things that he said were just inherently true, objectively true. So like no any kind of like ego or any other like character flaw of him, I was able to put to the side because the underlying message was true and accurate, and you were able to go back and verify that. And time proves things, and so I guess like you looking backward now, you can see that a lot of the things that he's been saying for years ended up being true. Now, I know you guys are kind of like you were getting into the whole Hex ecosystem like after the in 2022, right? And so not you weren't here in the beginning days, but when Richard was really trying to get eyes and exposure, he wasn't doing outrage marketing and he wasn't speaking the way that he did for the last year. He was very truthful, and like you need to go back and you need to go back and dig a little bit to find the truth on him, because there was a lot of mischaracterization and things. He used that to get eyes and to get attention, to get people that would otherwise not pay attention, that have maybe a lot of economic energy, to not be interested or not to know where to put their money in crypto, to maybe stop putting it in and misplacing their economic energy and putting it into something that actually has long-term value. And so like ultimately, I think he does care, and I think that that's shown through now in a lot of ways. And now he's pivoting his marketing campaign and switched away from the outrage marketing, and you're just beginning to see the beginnings of this new grassroots movement toward humble and just it'll be interesting to see this whole flipping occur right now. And so again, to answer the question directly, he spoke the truth about cryptocurrency. He was a Bitcoin maximalist for all of 2017, 18. And then he pivoted into understanding that he's always been a technologist. He pivoted to understand that Ethereum was the future, and it was then. And now it's come to its limitations, right? So now he's trying to push the bar and build it himself. And so he just continues to raise the bar and try to move the world forward. And I mean, it's obvious to me. I hope other people can see that too.
I love it. I always say on this show that you have to kind of check one's own ego and put that aside to be able to see the opportunity that Richard was trying to deliver. If you have your own ego in place, of course, you're going to get mad at his outrage marketing, or you're going to get mad at him, with his bluntness and whatever he's whatever he's presenting. So it's just a checking of one's own ego that gets to you to see the opportunity.
Often it is like your own ego that gets triggered by others' ego, right? Because it's
exactly
it's like two competing forces bouncing off each other. But when you come from a place of like surrender and acceptance and just a seeking truth, all of the ego passes right through you, right? And so you can see the actual pure truth for what it is.
And you see this everywhere in crypto. Everywhere.
When you see it in real estate too, and I've had a number of real estate transactions where we had to sit down at the closing table and I said, "Hey, are you here to make money? Or are you here about your ego?" Because if we're stroking your ego, nobody's going to make money, because you're screwing this deal up and you need to relax. Or are you here to make money, or are you here to stroke your ego? And I think the same goes for crypto, and you see so much of it on Twitter and YouTube. And I think that's a good guiding factor, or at least it has been for me, to be able to check myself. And once again, am I here to make money, or am I here to be able to be more concerned about my ego?
That's where all the haters come from.
The other thing too is like when it comes to generational wealth, like that is a spiritual endeavor just as much as it is like a financial endeavor. If you aren't right with yourself, you will mess yourself up financially, right? And so I think the opportunity of making 10,000x returns or 100,000x returns or even 1,000,000x returns, as crazy as that sounds, from the all-time low, it seems like it's just numbers on a screen, but really what it does is it impacts and affects you in an internal level when you are experiencing this stuff. And so it really brings all of the flaws to the surface for people. And so when we go through these market cycles, and you can see them on the chart, if you've ever seen that the market cycles of Wall Street chart, where it's like it goes from like hope to pure FOMO, and then back down to the anger, disbelief.
Yeah.
Is like, this is literally human emotion painted on a chart, right? And it's the natural redistribution and the life and death cycle of human psychology, right? So markets are just human emotion and psychology painted on the chart. And so yeah, it's like, it's all tied together. This is all one big movement. The human species is moving into like a whole new place where we're potentially going to go interstellar, and technology that you can't even fathom is going to come over the next 50 to 100 years. And I think we've seen that in the last 30 years, how fast the internet has rapidly changed the economy and business models. And, I don't expect that to slow down. And when you're talking about cryptocurrency coming in here and completely changing the game, even in real estate, for example, on the lending side, I know that industry is getting completely erased by technology. Who's to say that title and deeds and like realtors themselves aren't going to slowly get replaced by some form of technology, right? So the whole system is getting shaken up, and you want to find edge in this. And if right now the edge is in gathering all of the resources for the future, and right now that's cryptocurrency.
Freaking love it. Love it.
it.
Well, let's
Give me
get into
goosebumps.
yeah, absolutely. Let's get into some of the data. I'll go ahead and share your other screen. Yeah.
Yeah, sure. Do you guys just kind of want to steer the direction of like the kind of stuff you guys want to see first? Like,
Yeah. Well, everybody's excited about the Hex pump this morning, which is going really well. Why don't we start with a little, since that's what we got this morning. Let's look at that, and then I want to make sure we cover some real estate data to be able to get a feel for what we might be seeing in the real estate market over the next little bit. And I think it'll become very clear where it could make sense to be able to go risk on versus risk off, depending upon how you want to diversify and build a portfolio.
Love it.
Cool.
Yeah.
Awesome.
So tell us what we're looking at with Hex.
Right now, Hex is pumping off of a bull flag, and we've had this continuation pattern. So this is the 4-hour Hex chart, and we've basically been seeing since this actor came in after their initial breakout here around 3.2, 3.5 cents. Some actor came in and pushed the price up all the way to 5 cents almost immediately. I think it was about $12 million was injected in over this short, like day and a half period of time. And then there was a sell-off that led into another rip higher. This price was protected. And as you can see, I have a Fibonacci channel here, and we're continuing to hold these levels and make new levels higher. Like right now, so far we haven't broken down going all the way back to the bottom. We've continued to just trend into the upper bands. And as you can see here, the upper range here for this Fibonacci channel is sitting, like if we were to go straight up in one candle, you'd go up to 8.8 cents. So kind of to show you the upside from a technicals angle just within these Fib channels. As far as like the pump right now, what we're seeing is, this was a breakout, a retest, and a resumption. So this is a technical level where traders will come in, they'll reposition, and that's kind of why you're getting this this move higher off this 7-cent level. In addition to that, this sell-off was created by one account that ended a stake, and he was sitting on roughly 127 million hex, which was I think he initially sold 30 million hex. So then this sell-off was kind of him coming in around this level at 7 cents. Busted the chart down to the lows. It kind of tapped this 1618 upward trending Fib channel level. He found some support here. He stopped selling. He's now sitting on 90 million hex. And that's got a dollar value of like $6.2 million as of yesterday. And every time you go up, obviously that bag's getting bigger. So you want to, if you're a buyer in this environment, you're actually looking for a large player like him to come in, step in, and sell down so you can actually buy with less slippage. So, obviously, if you're coming in with 6 figures or 7 figures, you can move the price chart quite a bit. I'll pull up that now so you can kind of see what that would look like, because you want to be reasonable with how you're making your purchases if you are coming into the market. I think $100,000 probably wouldn't move the chart too bad. I think it's like 2 to 3% roughly. Oh dang, it's only a 0.2%, so really not going to move the chart that much now. But if you add a 0 and you were to market by $1 million, we had seen this previously. I'll show you on the chart shortly. That would only move the price chart 2% if you came in.
That's crazy. With all these haters talking about we don't have liquidity, we got plenty of liquidity. That's proof right there.
Mm-hmm. Yeah. So let's say that guy that's got 90 million wanted to sell 90 million all at once.
Ooh.
I think it's like 6.2 million. It would be an opportunity to buy, right? What it would do is yeah. Looks like it would push the price down 45% right now.
Oh, man.
So
I would be loading up.
Yeah. So, but here's the issue is that it's giving me a calculation of 45% on a sell down, but there's enough probably limit orders coming in to chase price, and that's a function of liquidity, right? And I don't know how deep we want to dive into this, but it is important to at least talk to somebody who does understand this stuff. So if you are going to come in and affect a chart either to the upside or the downside, you kind of know what your risks are. But so for example, on this chart here, this is the liquidity.
And give just a real quick breakdown. Well, I'll give a quick breakdown, and you can make it in crypto terms. So in real estate, right? If you're in a real estate market, and we've seen it with some of the really big players, some of these guys have built massive portfolios within their families, and they'll hold. In fact, there was a gentleman that I was talking to. This was a few years ago. Their family has acquired so much real estate in a Midwest market, and they freaking hate owning it. They're done with it. They want to move on. But the problem is kind of like with crypto with liquidity. Well, he can't go and just put all of it on market because it would hurt the real estate price. There would become so much available inventory and probably not the demand to match it, that the value they would get for that portfolio would be a fraction of what it would get if they were to go and, try to, if the value of just holding it today. And so we see the same types of things in crypto, but it can be much larger or smaller to a degree, depending upon how much capital you have to come into the market. So was that a general reason?
That's a perfect example, and I feel bad for the guy, because if he cornered a market, and it's like cornering the silver market back in the 70s. Like, now you have all the
Right.
silver, but who are you going to sell it to at that high price?
Right.
You know what I mean? So
Exactly.
it's crazy. But so this is the hex market, and all of this big square block back here, that's like $5 million of bid support, from 5 cents all the way down to 3.2 cents. So if the price were to move backwards, it would move faster and faster as you go back down towards that 5 cent level, because there's just less USDC locked at these different price ranges, and each one of these is like 0.4 of a cent different from the last. So if, like, right here at the red, that's where the price is sitting now, is at 7 cents. Each one of these bars goes down like 0.1 of a cent or so, roughly. And by the time you're back down to 5.7 cents, obviously you can see here that the price would drop off sharper and sharper and sharper, which is what we call slippage, right? So, like, if you put all your real estate on the market all at once, you might be incurring slippage, because you might have to sell for like less and less of the fair market value, thus pushing the entire market depressing the market in that area, because obviously there's way more inventory available. And that's what we have going on in hex right now. But to the reverse, to the upside, is there's less and less hex available on the market, and no one's really willing to sell. So then, instead of the price going back down to these accumulation ranges where large accounts would like to buy tons of it and not incur so much slippage, for example, like this little band here is like roughly like $500,000, right? Just in here. So, like, you could start throwing 500,000 in a rack and not push the price so hard and just accumulate as long as the price stayed there. The problem is, some large Ethereum whale the other day did come in and do $1 million buy right on this particular bar here.
I saw that.
And it pushed the price way back out to here, just with one buy. And then ever since then, the market took it higher. So that's how much force is coming into the market, which is keeping the price pinned, and which forcing liquidity providers who are putting these bars in here to move these liquidity bars higher and higher and higher in price.
I was going to say that it looks like some of the liquidity has moved up, and we've got a little bit more in this range than we did like a week ago or so.
That would be correct. Actually,
Still not a lot.
No.
Right.
I think this is only like 500 grand right in here, so not much.
It's crazy. It's like nobody wants to put ask.
Correct. Yeah. And if you're if you are that large shark that does have 90 million available, that's, by the way, that's double what's available on market. I think there's only 70 million hex available on market right now, if I'm not mistaken. We can check. If you are that shark and you want to sell, you can sell the price up by providing liquidity. So, like,
Right.
if we are assuming that the price is going to continue to trend higher, and the markets are, and we'll make a case for this in a little bit by looking at real estate, the S&P, and the crypto market, and just kind of see what the time frame is as prices move higher, or if we're going to get downside action. Because I tend to be bullish because I have a long-term outlook, but I mean, there's a lot of other data and correlation coefficients and stuff pointing back to that. Like, there's a higher percentage chance that this is going to be a good year, right? And I can't wait to get into that data. But yeah, so total hex on market right now. Well, it says there's 15 million locked. Let's see, just on the base pairs, you got about 20 million in that pool, and you got about 18 million in that pool. So I got this really cool tool that I had made for us. This is basically, it's a liquidity indicator, a liquidity jar, and it tells you how much hex is available on the market. I'm going to refresh it. And this is made by Hexfire.io. Crispy Man works over there.
Yeah, it's a
if I
great site.
So this is cool because it's like basically however many hex is available on market, it'll tell you, and then the stoplight basically is your indicator of, is this a neutral market? Is it a FUD market, meaning is there a lot of fear and uncertainty in the market, or is it a FOMO market? And so right now you're getting around that 65 million hex in the liquidity pools. You can see here on the bottom. That's the word we're defining that as it's basically a neutral market right now. So we're trending up, right? As you can see on the price chart, we're trending up in price. And what's going to happen is each time that you print a green candle, more of that 65 million in liquidity is going to get soaked out of this system. That's good for price up, but it's bad for people who want to accumulate the price. So basically what we have is a liquidity squeeze going on. So nobody's putting their real estate on the market at all, which is making real estate prices go up in crypto terms, right?
It's like we saw, yeah, like we saw from 2017 to 22, and there was this giant squeeze, and everyone was really excited about their appreciation. And one could talk about inflation and some of those things, but we saw the same type of thing.
Yep.
And so we have that effectively going on in crypto now because you have infinite amount of dollars printed over the last 3 years, but only a limited amount of cryptocurrency, and the good ones are being absorbed at the best price, right? Because this thing's been down now 96.5%, right, at the bottom, and so you were able to come in with a fraction of the economic energy and absorb 10 times the supply, right? And so that's what's created this shortage, right? So cool little indicator, kind of shows us that we're
and that's
neutral,
all
but
live
trending
data,
up.
right?
This is live, yeah.
Very cool. Will you talk just real briefly about liquidity? I know there's a lot of talk about being a good seller, if you will, by providing liquidity rather than dumping the price. So you go and you sell on market a large amount, like we've seen here. You can go and you can dump the price. With that being said, if you go and provide a large amount of liquidity, you don't hurt the price. You earn fees as the price moves through wherever you've placed your liquidity. But you also make price harder to move up, correct?
Correct. Very good assessment, sir. Appreciate that.
And so with that being said, is it, none of us want to see price down, but if we can't move it up either, it feels like, and this is me not understanding liquidity as well as I'd like to. And so I'd love for you to help me here. Is it really that much more beneficial to go in and provide liquidity than it is to sell it down as far as price action is concerned in the price chart? Or is it kind of sixes? Do you know what I'm saying?
It's more about your time horizon. Like if you're cool with waiting to sell, you can provide liquidity anywhere you want on the chart. So if you think so I got right in front of you guys, this is hex compared against the dollar, USDC. So these green bands are where you're going to set your range, and the pink band is where the price is. So we can see if I move the pink band, this is assuming price is going up, price is going down. You can see me shifting the slider here. If I provide liquidity, and it's $1,000 of liquidity between, let's say that the three of us are going to set some liquidity, and we're going to bet the price is going to go up. So we're going to put our liquidity where nobody else put their liquidity at. We're going to put it between, because these blue bars, there's a ton of liquidity sitting here.
Right.
Let's just put it like, I don't know, 7.6 cents where this left green bar is. And then we'll put the other end of it out at 11.6 cents out here. And it's only $1,000, so we're risking very little. As that price moves out further and further out into here, you can see that the dollar amount changes based on how far the liquidity goes. And so this is calculating the net. As the price goes out, you can see you're making like $270 of fees as price goes out. But at the same time, you're selling the hex that you have sitting there, because you remember this is sitting in hex because it's out in future price range. That hex gets converted into USDC. So you're effectively, as the price goes up, you're selling your hex for higher and higher prices. And as people trade it, you're earning more fees. Right. So if they trade it back and forth like this, this fee generator is going to keep going up. But as the price goes higher and higher, you're going to be left with USDC and no more hex at the end of this range.
Right.
If that makes sense.
And you get no slippage. You're getting no slippage against yourself. Why do you think it's some of these bigger whales, like the guy with the 127 million hex? Why isn't he setting liquidity positions to prevent slipping against himself?
Well, I mean, think about just from the mentality of somebody that put in. So this guy put in $30,000 on January 1st of 2020, and it turned into now what he's extracted is 12.5 million.
I guess so.
You know, this guy probably has never seen this kind of money in his life. Just assuming, I don't know, but so you know, just to get, I mean, when your gains are that good, like you can be a little bit reckless with how you exit your position. And I think that's kind of what we've had going on over the last year with the massive sell down. Like obviously you can see here on the 3-day chart, Hex has seen a huge decline from the 56-cent top all the way down to the 1.7-cent bottom. This was effectively people that made hundreds or thousands of times returns, and they've just taken profit at any cost, not really considering the market, right? But now that all that money's been redistributed, you can see here on the right, there's 267 buys to 159 sells. This has been consistent for about 5 or 6 months now, where there is demand for this asset because it produces a yield, and the buys are always outnumbering the sells 2 to 1, even some days 3 to 1. So on this particular pair, you can see $1.3 million of volume came in over the last 24 hours, and only $909,000 left the market, and that's on that particular pair. We have to watch 4 pairs, okay? Because there's 4 major pairs. On the ETH pair, 430 buys to 185 sells. So that's 1.4 million came in and 909,000 left. And so you have to combine those values across those 4 pairs to really get the total number. And I know this gets deep on all these things, but what you want to just know simply is that the buyers are outnumbering the sellers 2 to 1, 3 to 1 on a daily basis now for 5 to 6 months. And so this has all been pent up demand where a small amount of holders has been redistributing a lot of money to a lot of different people, right? So it's like maybe 1,000 people selling a lot of money to 10,000 or 50,000 people, and it's all been being redistributed. So big amounts in a few hands to little amounts in a lot of hands. And what that does is it lays the runway, so to speak, in airplane terms, it lays the runway for a massive uptrend to reset the chart and start off a new bull run.
Very cool. Well, let's move into some of the macro data, look at real estate a little bit, and then we'll move back into, we'll talk about some narratives with Hex and some of the other stuff that's going on. This will be fun.
Sure. I got one thing with that, and then I don't know if you have any data you want to bring up. It's just that if you go to my website here, accessalive.com, and you go scroll down to the blog post that I just posted, Hex Supply Shocked. This is I did have a section in here, if you scroll down far enough, where we basically make the case for that this is a statistically positive year for the markets as a whole. Okay, so looking at the past performance of the S&P 500 on pre-election years, we can see that they're typically, the price goes up, right? And this is like a high percentage rate of success. I think it's like 80% of the time. 83.3% of the time. It's a pre-election year. It's an up year in terms of the S&P 500. So you have that working in our favor. Here you can see.
In fact, I think the only time that you haven't had a president reelected when the economy was strong was Donald Trump. I think otherwise they're undefeated, if I'm not mistaken. So everybody wants strong economy heading into the election to be able to hedge bets for reelection. Correct.
And so to that point, you know, and to that point, there's this effect that occurs when January is a bullish month. It usually implies the year is going to be bullish. So in 72 years of records, there's substantially enough correlations to prove a remarkable 83% accuracy ratio with only 12 errors. So this January was bullish for the S&P. So that's another data point here that we're looking at to kind of, you know, determine that this is going to be a good year. And then on top of that, I also have inside here is correlations on again of the S&P against different time frames. And in all but one case, the outcome was bullish. So if I pulled up this chart, you can see that the 3-month high correlation most correlates to 1965 when there was a sideways action for 2 months and then it ripped higher. The 6-month correlation was a slight decline before ripping higher going into summer. The 2009 fractal, just slow grind upward, you know, coming out of the great financial crisis. And then the bearish one is the 2-year correlation, which is against 1947, which would imply some downside and then a marginally higher high and then basically like a triple bottom. But my opinion of this particular correlation is that there's a lot of money that was printed, inflation's priced in, and that the market today looks nothing like the market did in 1947 with trading algorithms and just like the overall technological efficiencies of the marketplace.
Interesting.
And so I guess to sum up that point is that, Bitcoin does have a correlation to the S&P. If the S&P is doing good, typically Bitcoin will do good. Bitcoin will either be the leading indicator or the lagging indicator, and it kind of changes over time, but typically they do go up together. And then I guess we can touch on real estate, and then I got some dollar data for you.
Yeah, let's do it. This is great. So real estate, I feel like it's tricky because there's a lot of people feeling bullish on real estate. You see some more life come back into the real estate market. You see a little bit of price stability in some of the markets, like mine in Utah. We're a little bit higher priced market, and we've seen some correction there. Certainly seen it in California and New York and some of those types of markets, whereas others have held more stable. What are we looking like, or what is the data saying, do you think, in regards to what we could see in the real estate market this year?
I'm really kind of hoping you guys have the answers for that, because honestly, I can look at the data, but I guess just the simple facts of like the Fed continues to raise interest rates, which is going to disincentivize people to take loans, right? And so maybe you'll see like a sideways or slight decline in just due to the fact of what lending's kind of looking like. But as far as like demand, I think demand is still the same and increasing because you just have more and more people needing residence, right? So we're kind of at this weird crux in the economy where you have more people needing a place to live with less funds, except in the case of the upper middle class or the wealthy, which have all these excess funds to pump markets. It's kind of a weird place and a weird time that way.
It is. And we've seen it. Corey's out in Phoenix. We've seen it in these really high demand rental markets. Pricing just went absolutely bananas with the big hedge funds buying stuff up when money was practically free to borrow. And now with some of the pullback, it was hard as a traditional real estate investor to make something cash flow in a lot of these markets just a few years ago. And now it's fascinating because there's a lot of people calling for a crash for better pricing. But the fact is the cash flow is worse or similar in a lot of markets because of the rising interest rates. And so there's not necessarily this huge opportunity, at least today. And so I've seen a lot of our guys that we know, they're buying, and it's tricky. It's the same as crypto. There's a lot of speculation, but they're speculating on a little bit better pricing now, and ideally a little bit better correction in interest rates potentially over the next few years ago, and refinance out and increase their cash flow to be able to lever a little bit differently. And so what are your thoughts, Corey?
I'm in the bearish camp when it comes to real estate, man. I don't think the markets have really have felt that much pain yet from all the interest rate hikes. I think that we haven't seen the pain yet of the hedge funds dumping their inventory. I think the hedge funds are running deep underwater right now. We see it in Phoenix where Opendoor is losing about an average of $100,000 on each house right now. And so I think we're going to see this influx of inventory in 2023, and I could be wrong, and I hope I'm wrong, where it could really affect the pricing in some of these A markets, like you were mentioning earlier, like Phoenix, Utah, California, Washington, some of these really high appreciated markets where the Midwest won't get affected too much. And so if you look at the pricing on new builds, you can see in 2022 we're still at the end of 22 we were still on the top of a bubble on new build pricing, which is the netter indicator. I don't have the chart convenient here with me. And I was looking at that. Oh, there we go. Access has got it right here. The home prices. You can see right there, 2022 is we're still at the very top. And so I just feel like real estate just has a slow moving market. Like we're a snail when it compares to crypto and even stocks. Crypto is like fast, man. It's like first to react. In fact, sometimes we'll react before the interest rate meeting, the FMLC meetings. You know what I mean? We're like reacting before. Where real estate, man, I don't feel like we really feel anything until months down the road, and sometimes even years, just depending on because there's just so much data showing right now in these A markets that we're still in a bubble. I could be wrong. What are your thoughts about that, Axis?
I think I agree with you that I guess I'm bearish because like just looking at it from like a young person who's, you know, seeking returns, I'd rather just stay out of the real estate market and capture any kind of quick gains that I can get in a bottoming crypto market. You know, there's a lot of quick money to be made without all the overhead and all the stress and without that time delay or that lag of relying on what a central bank is going to tell me, you know, what's going to happen to the market for the next 5 years. And the Fed is getting demand destruction whether we like it or not in the raising of interest rates. And so really the bull market for that market doesn't come back for me until they pivot on rates and big money can come back in and scoop things up on a discount.
Absolutely. Yeah, these charts represent it very well. I love that you pulled these charts up because that's what I see right now. And I don't see much pressure yet as far as pricing, like here in Phoenix. I'm in an A market in Phoenix. And so we're still haven't seen that correction come yet. And I feel
we are, and they're trying to save it now. Like you see legislation happening. It's happening here locally where they're passing bills and policies to be able to give first-time home buyers or different, you know, socioeconomic regions, they're giving them incentives and bonuses to be able to go buy. So I believe, if I understand, I read a story on this the other day. I haven't verified, so don't crucify me if I'm not quite right on this. But I believe that in Utah right now, if you're a first-time home buyer and you buy a new build, you can go and get a $20,000 credit towards the purchase of the home, essentially, you know, like making it so that you're gifted your down payment, which is kind of a cool opportunity.
Yeah. You know, it'd be funny to see is if we see the real estate market really do its correction while we're having our biggest bull run in crypto. And you could literally, you know, as you're selling off into 2025, be rolling that money into real estate's maybe the bottom of the real estate market. That would be absolutely just
close to it.
You're literally sending chills up my spine because that's honestly what I think is going to happen is there's going to be a secular bull run in crypto, and then that money's going to float into real estate on the
absolutely low. This is the time where, and I talk about all the time, where we can use cryptocurrency as a wealth creation tool and then use real estate down the road, you know, on the next bull run, you know, for a wealth preservation tool. And so it's just it'll be interesting to see how this all plays out. But man, it's just the way everything lines up. You know, the data doesn't lie.
Such a good talking point. And so then to take this even a step further, if we're all kind of agreeing on that sort of outlook for the next few years, the dollar is already set up. Here I have the dollar index chart. So for those that don't know, the dollar index chart is like the dollar value against a basket of other nation state currencies. And this is on a longer time frame. This is going back, you know, 25 years. Okay.
Wow.
So what we have here is on these yellow, you can see on the bottom, there's like a panel down here with a blue line and a red line in it. The blue line represents bullish and the red line represents bearish. So if the dollar becomes bearish, meaning the red line is on top, that signals strength for risk assets because people aren't going to hold dollars. They're going to find safe haven in something that's going to give them a return on their investment. Okay. And so what we're seeing right now is at each one of these yellow lines, that's a pivot point where the bearish sentiment flips up on a positive slope and the bullish sentiment flips down. Obviously, you can see here on the price chart, or maybe not so obviously, that this was a pure parabola on the dollar over the past couple of years on weakness in risk markets that had a blow off top. And now the dollar is basically like a person grasping for air trying to get back up from that blow off top. But all this is doing is setting up for more downside. And so this is the trading, the washing of hands, so to speak, where people are going to try to reposition into risk assets at the best price, which basically sets bottoms, and then the dollar eventually cracks lower when that next wave of money comes into the risk assets. And you can see that relationship going back every few years. For example, in 2015, when the dollar flipped a positive slope on the bearish line, red, you can see that the dollar changed its trajectory from going vertical to slowing down and chopping sideways. And each one of these sell-offs, you can see where my cursor is, that represented upside in cryptocurrency. So the first one was in 2016 when Bitcoin made its bottom, and then again in 2016 and 17 toward the end of the year into 2017 when Bitcoin had its 20K Christmas. The dollar going down is good for crypto. Same thing here, 2019 signals it 3 months early. Dollar starts pointing upwards on the bearish slope. Signals it early, you get a couple months of sideways, you get the COVID event, dollar crashes hard, right? And it was all signaled by this red line pointing upward again. So what we're seeing now is, again, these time frames here where the dollar price goes kind of at a slight 45-degree angle before breaking down. This period doesn't last long. It lasts roughly like 6 to 12 months. And so anyways, this is just like right now we're setting up for that same play again, where people are repositioning, trying to get the best price on the bottoms of some of these the best growth stocks and some of the best cryptocurrencies. And then as the dollar breaks down, people try to flood in behind them and chase big green candles, and that's when retail enters the fray.
Thank God we got you to point this out to us before retail floods in.
The other thing here is this is a stablecoin index, and so the way that crypto people measure success in the market is by watching the stablecoins. So that's like dollar denominated or dollar pegged cryptos, because that's basically where crypto people go to hedge against risk. So if they think Bitcoin's overvalued at 50K, they go into DAI, Tether, or USDC so that they don't incur the downside losses until we hit bottom, and then they bring that money back in at the bottom. And so what this is it's an index of all of the stable coins combined, or these three that are the major ones that I track. And you can see that it was in a rising ascending triangle, and it broke that technical pattern and is now again, like the dollar itself, it's putting its head back up to come back to test that level. Unless it can get above that level, retest and resume higher, which would signal short-term bearishness in Bitcoin and Ethereum. If it can't do that, it gets up to this level and breaks back down. That's going to be that next wave of money that's going to fly into crypto. So keep a good close eye on the stablecoin index.
Wow.
Very cool. So let's talk about, so we've got some just insane hype cycle stuff coming up with Hex. We've got Pulse Chain coming up. We've got Pulse X. It sounds like we're pretty freaking close to V3 launch there. Let's start
before we do that, guys, smash the likes and hit subscribe, please. If you love this content, we're going to keep bringing you this type of content on a daily basis. Please smash the likes and subscribe.
Seriously, support you guys. This is a really good conversation. I appreciate your guys' input too, because it reinforces a lot of the things that I'm seeing for the next 2 to 3 years as well. So thank you.
In fact, I'll put a banner at the bottom here. So you guys, like we said at the start of the show, we're doing our best to bridge the communities. There's opportunities in both. And so one of the things that we're doing we're trying really hard to do in our group, we're about 70 members strong right now, is we're getting the right real estate operators, where if you want to go, like we are going to be doing with part of our portfolio, if you want to go into real estate or you want to go to, more traditional asset classes, when you are taking profits at the top of the next bull market, I can tell you, and Corey would agree, that we never want to go be the ones to hunt deals again. We don't want to negotiate them. We don't want to deal with all that stuff. But we absolutely want to be the passive money that goes in and buys the assets. And if you have the right operators in place to go and do this with, that like, and trust, that you've helped get wealthy through crypto the whole time as well, there is no better way to go and do that. In fact, we've talked to a lot of crypto guys where they've said we've taken profits and then we've gone to real estate events and we don't know who to trust. We don't know how to do this real estate thing, and we're building that framework out now. So that's
I got news for you. Don't trust the gurus on Facebook who you're seeing every single day holding all the events. They're making money from holding the events, and they're making money from being gurus. They're not making money or doing right by you being an operator. So be careful. The true operators are behind the scenes, the good guys, the ones who are really good at running, massive operations of 3,000, 4,000, 5,000 doors. These guys are behind the scenes.
Yeah, I would assume that these guys are too busy working and actually providing value to be committing and creating events like that. So
yeah. So be careful.
So no pressure, but if you guys want to schedule a call and just talk to us about what we're building, see if it made sense for you to get involved, you can check out the link that I posted here in the banner. We'd love.
And of course, you real estate guys, get in on this crypto train. Right now is the time. Wealth creation time is happening now.
The amount of the upside is great, but what's scarier is the thought that once these prices on these important assets are gone, they're gone forever. That's what store of value cryptocurrencies do. That's what anything of value does, is it creates an S curve and floors in price that they never come back down to those levels. A crap coin or a crappy investment in stocks, a failed company, those come down and go to zero. But anything with real product market fit that's going to be here for the long haul is going to create floors in price, and you're just never going to get these prices again. Once Hex is over $1 and can find that level of support, that's set in motion, that's permanent. And so I keep reminding people, like, do not get left behind. Get some exposure in this thing, because so many times, like even with my brother, like he's a tax accountant. He runs multiple businesses, but he calls Hex a penny stock. Even though he got in at 1.3 cents, watched it go to 50 and come back down, he calls it a penny stock because he doesn't understand the value is in the immutable code that can't be changed, and the monetary policy that can't be changed, and the permanent yield. Imagine getting 100,000 Hex today, staking it, for 2 to 5 years, and seeing those returns. That's one way to look at the contract, but I like to look at it a different way. What happens if 100,000 Hex is now worth $100,000, and you can roll that $100,000 on a 45 or 90-day stake and earn $8,000 or $15,000? Now you've got passive inflows that you can put into the real estate market at every 90 to 180 days, because the dollar price is what ultimately is the most important aspect of Hex. Anyone that's been in now just a short time doesn't realize the power yet. But they will, and they will chase the green candles. Don't be the guy that's buying Hex at 56 cents when you could bought today for 7 cents.
Great point. Let's jump into some of the narratives then. So let's run with the staking one that you just brought up. You could stake Hex clear out to 15 years. When we got into Hex, we built staking ladders, and we did that. We build them out, clear to 15 years. And I'd love your insights on this. If we could go back and do that again, I wouldn't do any of that. Instead, we build staking ladders that we built for the bull cycle. Mm-hmm. We take profits, and then in fact, I was arguing with a guy on Twitter, and he's like, "What about the T-shares? They'll leave you behind." And I'm like, "Well, the T-share value will change, but if you would have sold Hex near the top, and it's not going to be perfect, but near the top, and then bought back near the bottom like we are now, you would have gotten infinitely more, not infinite, but like 10 times more of the T-shares. And even though the rate would be a little bit different, your earnings would be significantly better."
Mm-hmm. A lot of thoughts about that. One thing is that, you look out far enough into the future, and everyone's going to be okay. So you guys didn't make a mistake in doing that and locking in those T-shares, because they are going to produce massive gains. And let's say on like your longest ones that are 15 years out, when year 7.5 comes around, you will be able to pull the principal amount out by taking a hit on the interest. And if the dollar value is like $10 a Hex, well, what do you care? Like, you just saved yourself from yourself, right? And so, yeah, you get the EES penalty, but all your principal Hex comes back in your hands, and then you can say it's worth $50 million in 15 years, but you can pull it out for $3 million in 7.5 years, and then roll that $3 million every 30 or 100 days. That's basically how this is going to go. Is people are going to reposition when the time is right for them, and when the dollar price is meaningful enough that they can pull out, take the hit on penalties on the interest, but still make something of it. It's just going to work out either way. It's just, I wouldn't say that you guys made a mistake, but here's another way to look at this as well: is if you waited a year from today to stake Hex, and the share rate went up the way it's supposed to, meaning everybody that's staked right now ends their stake on time and nobody restakes, you're going to be looking at roughly 20% less T-shares in 1 year. Okay, so that means that if you can get 40 T-shares today, but you just hold the bag liquid through the bull run, in a year, if all conditions are met and stay the same, you can still get 32 T-shares. Okay, so that's just a 20% decline. So you're going to get 80% the amount of T-shares 1 year from today that you'd get today, based on the current estimated share rate going into the future. And then, you can project that out even further, so that, maybe in 3 to 5 years, yeah, you're going to be like getting only 50% of the T-shares you could get today. So it does become meaningful, especially when you're bringing in new capital, because you're just not going to be able to compete for those T-shares at these prices, right? You're going to have to buy 6 figures of Hex just to get like 10 T-shares in the not too distant future, because of how fast and violently the price goes up on the low liquidity and the high slippage, and then the adoption through Metcalfe's law. Metcalfe's law states that a network grows exponentially with every doubling of users. Well, if you go from 100,000 users to 200,000 users, you can potentially 10x the price off fair value. Okay, so that's in a speculative market, right? And so like, yeah, it's easy to say looking back, like, oh, I wish I wouldn't have staked, or so I could have bought, I could have sold the top or bought the bottom or this or that. But ultimately, we're so early on this that all the people are going to be taken care of so long as they don't sell for a loss. Every single one of them.
So if you were to, so let's say that, you stumbled into the stream and you said, hey, I've got X number of dollars and I want to go buy some Hex and do some staking. What would you suggest? What might that look for somebody? They don't need to take profits tomorrow and they want to optimize their gains. What would you suggest?
Yeah. So I would just start with simply that, if you stake for 5 years, you get double the returns in Hex terms. If you stake for 10 years, you get triple. Any day over that 10 years, obviously that triple the interest is going to compound in your favor, going out to that 15-year maximum. So I guess it's not for me to say ultimately, and I got to be somewhat selective with how I present this, because this is kind of what people pay me to talk about, is like, how should I strategize around a staking ladder? But all I need to tell you for you to be successful in Hex is that have a bag of liquid Hex to ride the bull run with, so that it gives you optionality, and then have a middle term, stake or staking ladder, like something that's like midterm, maybe like 3 to 5 years, and try to time it up with the market cycle of the 4-year Bitcoin halving, because that's typically historically been, what we see as like a typical market cycle. Maybe play that cycle a little bit with how you're positioning in your midterm, and then have at least one stake that's a long shot, a moonshot that goes out past 10 years, so that in the event that this thing does go to like $50 or $100 or even only just $10 per Hex, that it was something that you put safely away that you'll be able to come back to, and maybe on year 7.5 or year 5, you can decide like, okay, this is enough for me, and you emergency end stake and you pull out mad profits, right? Or maybe you leveraged it properly and you had a liquid bag to the bull run and you got to play that. So like that 15 years just sitting there is just cream on top, right? You don't have to put all of your eggs in like at one price. You can bring in 10% or 5% or even 1% of your net worth and see massive returns on the longer term stuff.
That was probably one of the best answers to that question that I've ever heard.
Awesome.
So
There's just so much optionality with it, right? You can do so much. And when you figure that maybe if the price was at $3 right now, I wouldn't be so comfortable telling everybody that particular portfolio allocation, right? Because at that point, it's already starting to get expensive in terms of what a person makes and their wage or at their salary job, right? So once you start getting into like $10 and $15 price targets, or even just $5 price targets, it changes the theory and the strategy. But for right now, when it's pennies, anyone can buy it and get a meaningful amount of the coins, thousands for $1, right?
This is true. What about the narrative? I would love to touch on this one of the E-Hex and P-Hex parity narrative. And what do you think E-Hex is going to do after the fork, after Pulse Chain launches? I mean, don't you think, and this is what I think personally, that a lot of economic energy is just me going to Pulse Chain? For example, if I'm going to onboard somebody new, I would onboard them into Pulse Chain just because of the cheaper fees, right? The majority of retail would want to go where the cheaper fees are at. So what is your opinion around all that?
Well, we already know that Ethereum is the most widely adopted EVM on Earth. So like it's already the first market mover advantage. And so even if Hex has a nice run up going into the launch and has a huge retracement of like 85% after the fork, that's still going to be 10 cent or 20 cent Hex, right? Even at those huge retracement levels, because I'm seeing the price not stopping at 7 cents. I think we got more upside. And so when it does do that retracement, think of it this way, Pulse, PulseX, and P-Hex are all going to be valued at fractions of a cent. And so maybe one of the strategies here is to wrap some of your E-Hex after an 85% drop even or sooner, right? For when it's still trading at 10 to 20 cents. And you can acquire so much more of that PulseX or P-Hex supply with wrapped E-Hex that you send over the bridge to buy at, you're using 10 cents or 20 cents of economic energy per unit to purchase hundreds or thousands of PulseX, and P-Hex. And people aren't really thinking about that. And as far as like the parity notion that Johnny Chaos talks a lot about, that's a very smart theory. And it's possible that a large actor in the system binds enough of the liquidity, and the way that would look like would be between eHex and pHex. Basically, you'd wrap pHex, send it over the bridge to Ethereum, and you'd pair wrapped pHex with eHex on the ETH chain, and then you do the reverse too, where you'd send eHex over the chain wrapped, and then compare it against pHex on the Pulse chain, and it would bind the liquidity together so that they move together at the ratio that the market sets, right? Because the market's going to set the ratio. Because think about it like this: the most expensive monies on earth, sound monies, are the slowest, heaviest, hardest to transfer things. Gold, heavy, you have to physically transport it, but yet still multi-trillion-dollar asset class, widely accepted across the globe. Still a good store of value to this day. Bitcoin, slow, expensive. You sometimes have to wait an hour for transactions to confirm. People still trade it for $25,000, $22,000 a coin. Ethereum, a little bit faster. Gas is expensive, trading at like $1,200 a coin. Hex on Ethereum, still the first mover, gonna have value. OGs get to swing their dick around saying, oh yeah, I got in on this and I can stake it and it means nothing to me. The gas fees mean nothing to me. I'm gonna acquire all the supply up and just support the price at 85% off or 65% off, whatever happens. And eHex is destined to go to dollars plus, and so you're competing against pHex, which is a whole new network. It needs all the new adoption. I'm not bearish on Pulse Chain or pHex or Pulse X. I think that, but with that is, you're relying on the adoption, right? And so what we can count on is what already exists and what the trends that have already existed, right? And the other markets. And so all that other things on Pulse Chain is going to start at a lot lesser value in dollar terms relative to what value we have already existing on Ethereum. And so just hedge your bets. It's going to be a ratio trading game on Pulse Chain in the beginning. You're going to have to do some mental math and, to give you some freebies here. Like there's about 140,000 people that sacrifice for PulseX and about 40,000 people that sacrifice for Pulse Chain. So the base ratio should be 3-to-1, PulseX to Pulse. When the discrepancy gets wide enough between you're getting it's 10 PulseX to every pulse, well then maybe that's a 10x difference. Maybe that's a good time to shift your money out of the thing that you have that's overvalued, which would be Pulse Chain at that point, and put it into the thing that's undervalued, where the ratios get out of whack, and just use that 3-to-1 ratio as your base.
I think we'll see a big just narrative right there that from pHex over to PulseX or pHex over to Pulse Chain. I think we might get an opportunity to pick up some amazing cheap pHex, because the narrative right now is buy eHex for the copy and then swap your pHex into Pulse Chain or PulseX. Well, if everyone's doing that, that's going to drop the price of pHex tremendously, and we should be able to pick up a very good bag of pHex for very cheap before the bridge comes in.
Thank you for reminding me to say that. Thank you for saying that. That's the one piece that I forgot. Yes, pHex probably right, but you're saying could dump, massively in when everyone's chasing Pulse Chain.
Exactly. And I know pHex is going to do well after that bridge comes in, because there's too many Hexicans are going to go over that bridge and buy it up when it's at a discount. So
what's the likelihood, Axis, that you think that we see? You talked about $1 a hex. Do you think we see $1 per chain, $1 plus? Let's talk about this next bull run.
So not this one that's coming up.
Let's do this one that we're in. I apologize. So 2025, 2026-ish top.
You're really going to put me on the spot like that. I don't know if Pulse Chain Hex can do it, but if it could, it would. I'm of the belief that, again, because of the underlying transaction costs between Ethereum and Pulse Chain, they're going to be different. That the coins won't be parity.
It seems like you're saying that you think that Hex on Ethereum will be more valuable than Hex on Pulse Chain.
Really?
In dollar terms, but again, what pHex relies on is new adoption. So, but we can count on that. There's already adoption on Ethereum. Think of it like this: if you're an Ethereum Genesis whale and you're sitting on 15,000 Ethereum, or 20,000 Ethereum, or 100,000 Ethereum, and you're looking at a future where your chain is dying, losing adoption to other new chains, and you're looking at your Ethereum price going from $2,000 or $1,500 all the way up to maybe 8,000. Maybe you get another double at that price in the peak of the next bull run to 16,000 a coin. That's only like a 5 or 6x on your Ethereum bag. Wouldn't it be smart of you to convert some of that Ethereum economic energy into Hex, which can potentially do 100x in the next cycle, and you could be part of that trade and push that price up? if enough whales gets together and realizes this fact and then starts getting, they get the price over $1, and then they can milk the contract for interest. I mean, that's basically what we're faced with is, only a couple whales. There's already big whales in Hex, and a new Genesis whale just bought their first 1,000 ETH. These guys are going to have to look at new solutions to the problem of their Ethereum price targets in the next bull run are diminishing returns, right?
Interesting. You're the first person we've talked to with that opinion. That is fascinating. Yeah.
It is fascinating. And the thing, it's crypto, so it could happen. Anything can
Absolutely.
happen.
So talk about price targets. And once again, you guys, there's no financial advice on the show. It's all just for fun. We're just some guys on the internet. Make your own financial decisions. Are you of the opinion then? Do you think that Hex is more likely to outperform Pulse Chain and PulseX in this next cycle, or less likely?
So typically,
good
average,
instincts. Once again, we're not going to hold you to it.
Typically, on average, like a layer 1 when it launches, it does 1,060x over a 3.8 year time frame. That's
right.
That's the numbers on average. So do I think Hex either chain can outperform 1,000x in 3.8 years? Well, it's probably unlikely because it doesn't need to. It only needs to do 100 to 500x to still be mad gains for a lot of people, especially when you factor in staking. And so, yeah, I mean, I guess I don't think that Hex is going to outperform Pulse, because if you get the adoption that should come with a better chain, faster, cheaper gas, then yeah, no, they won't outperform. But I just see it as the sure bet, right? It's the fastest horse with the lowest liquidity and the sure bet. So it's still a great trade, obviously.
Now, if you get the pre-bridge deep discount of PHEX, it might outperform Pulse Chain or PulseX. That's my opinion, though.
I like that.
Yeah,
it might. What's your opinion of potential price targets on PulseX? We've talked about Hex and Pulse Chain. Do you have any opinions there?
I don't really have an opinion on that one because I honestly don't know. I think this particular token has a huge edge over things like Uniswap or other coins that came before it. A lot of those other things are just duct taped on tokens, and they didn't have like that buy and burn feature. But man, I think PulseX can do good longer term, right? I think in the beginning, Pulse Chain will kind of take all the swagger because people need it to transact. But then
and
after
FOMO.
that, and FOMO, obviously then the ratios are set against PulseX right now. Less people got Pulse Chain, so. But I guess I don't have I need to see for me as a technical analyst to give price targets on those, I need to see where we bottom. Kind of see the initial performance of both.
Yeah.
Fair enough. That makes sense. Well, cool. We've been going for a little bit over an hour. We try to keep these shows to about an hour. Corey, is there any last things that you'd like to cover on the show today?
No, man. I think I'm good. We definitely want you to shill all your stuff, Axis, where everyone can find you. What kind of value you bring, to the community is amazing, and how they can seek out for more of that value from you.
Awesome. Well, first of all, thank you guys I can consider some new friends I've made, on this stream, and some quality information from all parties. So thank you for that. Yeah. If you want to find out more about me, I've got a Twitter handle. It's @AxisAlive, one word. Please do me a favor, and if you see like scammer accounts, there's been people like making @AxisAlive_ or like they're making other weird names. Please report them because I don't want people getting scammed. So find me on Twitter there, and then I have a website that I launched at the beginning of February. It's axisalive.com, and it's just a broad scope of the markets. I do chart sets a couple times a week, a blog post usually once a week, which is available for everybody. Just got to sign up. And then, there's just a lot of content on there. I'll have if you go to the events page on there, you can see any upcoming streams. I got 3 more streams this week. I got a stream on tomorrow with Black Hexakin. We're going to be doing some basics of charting. And then on Wednesday, I'll be unveiling my introduction. It's a sweet new intro, an animated Axis Alive logo that we just got done by Markable Thoughts. I can't wait to drop that. And we'll be talking a little bit more about the broader scope of human consciousness and philosophy, and where the species is going and how we can get an edge on technology moving forward. And then on Friday, I got a stream with Crispy Man, the guy who runs hexfire.io. We'll be doing a deep dive on some really key data of Hex. So you guys might be interested in that one.
Yeah.
We'll be covering. Let me pull up what we got here. What am I going to be covering with him? I think we got a DCA calculator, so we'll get to see like you know, obviously in your case, Corey, you actually saw a profit now, right? Because you've been buying. If you want to explain to people quick what that was like.
Correct. So I started at the 30-cent range, and I'm talking pretty close to six figures. You know, when I first got into this community, I came in right before the PulseX sacrifice, and so I started buying at that time. And I've DCA'd for the 2022 for the whole entire year all the way down. But the majority of my economic energy was put in towards the bottom in the 1.8 cents to 2.4 cents range. I put a lot of money into there, and plus I bought some really cheap HSI auction stakes at a penny. Like I literally got some really huge stakes at a penny price when the HSI auctions first came out, when ICOSA first came out. And so from blending all that in together, I've gotten my cost basis down to 3.5 cents from a 30-cent original buy. So that shows the power of DCA, guys. And so, yeah, right now I'm up. It's amazing. It's happy. It's so nice to get up in the morning and see a green candle and know your portfolio is up. You're like, holy crap, this is a nice breath of fresh air compared to the last year.
There's such a powerful lesson there for people that are new to this stuff, and like, don't give up. Look at Corey. He risked six figures early, saw a massive loss, but he stuck with it. He followed the value of the contract, and now he's been a price positive actor on the ecosystem, helped create the bottom, and now he's seen profit already, a doubling off his cost basis. So it's so amazing. I'm so happy for you, and man, I can't wait to hear your success story going forward. And I probably will talk to you about real estate for personal reasons in the future.
Yeah, absolutely, man. We got some heavy hitters in our group. It's been fun.
In fact, and would you talk Axis just briefly? So I've gone on your site, checked out your stuff, really like what you have going on there. What can someone expect from the personal consults? I saw that was an option.
Yeah, so if people come in and they want to speak to me pretty much on any of the stuff we just talked about, but even go a little bit deeper on market cycle analysis and trying to find the tops and the bottoms of the next cycle and how to strategize like a staking ladder around that. I was able to correctly, catch the bottom of the 2018 cycle, I've sold my Bitcoin mining facility at the top of the Bitcoin 64K top.
Oh!
So, I mean, I have a track record of at least being somewhat relatively good at that, because I do look at things on a much longer time frame, and I'm super patient, always have been. So if you want to know more about that stuff, like, I will answer any question that I can. So if you're coming in there for a personal consult, you bring up the questions, and I'll do the best of my ability to answer them.
Cool.
I might be booking a couple of those
as
we're moving along. Yeah. Because, man, you're just full of knowledge, and I love it, man. I want to surround myself with people who are smarter than me in that niche. That's what I always did in real estate, and that's how I was able to create success out of real estate, was by getting around people who are doing it at a higher level. And you're that person in crypto. So I'll be booking some calls in the future, bro.
I'll be looking forward to that. I can't wait.
Yeah.
So you guys go check out Axis Alive. He's got so much incredible content that you can benefit from to make good decisions or better decisions in the markets. Like we said, if you want to schedule a call with us to chat about our group and how you could get some potential real estate exposure near the next top when you're taking profits, there's lots of tax benefits and opportunity for stable income there. Feel free to schedule a call with us.
Or real estate guys want some good crypto exposure.
Yes, absolutely. If you're a real estate guy and you're not getting crypto exposure, absolutely schedule a call with us. I promise that you are in the right place at the right time. We can help you do all that the right way. In fact, we've got a number of guys that have hundreds of units under management. They jump on the call. They say, look, we want to do this crypto thing, but we don't want to know it to the level that Axis does or that Corey does or that Dane does, but we want to have a simple plan so we can get exposure and reap the rewards. We help all those guys with that, and our guys have had a really good result. So,
and the good stuff is most of the crypto that we do, about 99% of it, creates passive income. Like Hex. Hex creates income while you're sleeping. So it really speaks to real estate guys. That's why it spoke to me so much. Why I love this ecosystem is almost everything built in this ecosystem is created in a sense to create passive income for you. Create money while you sleep. It's important for legacy wealth, guys.
Absolutely. So that, guys, we'll catch you later. We've got, real quick, we've got a huge lineup this week. We've got guests on every single day of the week this week. So make sure to tune in. We'll shout those guys out, and we'll catch you guys tomorrow.
See you
guys. Thank you so much. Appreciate it.
Bye.